For the CME. This is Chris Robinson with your tip of the day. We're going to talk about what happened in commodities in the wake of the two hurricanes we had here in the U.S., especially Irma. If you take a look at one commodity, you can see how this market really moved cotton. Not so much the rest of the markets in the U.S. here, but certainly cotton. I'd ask you to go pull up a chart, a daily chart of December cotton. That's new crop cotton. That's cotton that's in the field. Initially, we had a $10 rally in about 4 or 5 days. A lot of the investment community took the opportunity to get long. If you look at the commitment of traders, which comes out every Friday, they took their position from long 20,000 contracts to long 70. Pretty big bet. And then once Hurricane Irma did not come up and really go through the key acres areas where it might have really negatively impacted our cotton yield, you saw a rush to the exits. Interestingly enough, we rallied $10, and in about 3 days, we dropped $7.50 of that. Now, we stabilized a little bit. There was some thought that the managed money, who again were bet very long, they were going to try and defend a technical area in the December cotton right around 69 cents. It was a big trend line. So you had all these things come together. You had a weather scare, you had money flow coming into the market, and you had a technical level of support. As I'm speaking to you here today, cotton has come through that 69 cent level. Now you're in a situation where the managed money is all long and they've got to get out of at least 70,000 contracts of cotton. That's a lot of cotton to have to move in a market that's relatively thin. Cotton is notoriously called the widowmaker trade. So this will be really interesting to see how this plays out. The managed money, again, they're kind of like Wile E. Coyote out there in the middle of space with no support. Now they have to get out. As they get out, as they sell it, every time they sell it, they're pushing the prices down lower. And we'll see how that plays out. So I would say that's the number one commodity, I think, that was most impacted by the hurricane that we just had, the two hurricanes here in the U.S. And you're seeing now how the fear trade, everybody got long as they thought prices were going to go through the roof. Now they're stuck. So good volatility, a very dangerous trade though if you're not being very careful with your stop losses. That's about it. That's the tip for the day. Take a look at Dees Cotton. This is Chris Robinson from the For the CME.